Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing world of corporate finance. And let me tell you, Guess is making a move that sounds like it came right out of a movie script. Today we're diving deep into Guess Inc.'s latest 8K filing. And folks, this one is a biggie. It's all about a deal that could change the game for the iconic fashion brand. Think mergers, acquisitions, and a whole lot of legal jargon that we're going to untangle for you. Grab your popcorn because this is going to be interesting. Before we dive in, if you're new here, make sure to hit that subscribe button. And if you want to connect with other finance enthusiasts and get more exclusive content, join our Discord community, link in the description below. So what's the big news? Guess Inc. is entering into an agreement to be acquired. The key players here are Guess Inc. itself, a company called Authentic Brands Group LLC, and a couple of their subsidiaries, Glow Holdco 1 Inc. and Glow Merger Sub 1 Inc. Essentially, Authentic Brands Group is buying Guess. This agreement and plan of merger, as they call it, spells out the terms of this whole sale. It was approved by Guess's board of directors and importantly by a special committee made up of independent directors. That's a good sign. It means they're trying to make sure this deal is fair to everyone involved. Now, this isn't a straightforward cash grab. There's a bit of a restructuring happening beforehand. Before the actual merger, Guess will transfer its intellectual property like brand names and logos to new subsidiaries. Then Authentic will buy a majority stake in these intellectual property companies. Think of it as separating the brain of the operation before the rest of the body is sold. The actual merger sees a subsidiary of Authentic merge with Guess. Guess will then become a wholly owned part of Authentic's group. The deal is set to close around the fourth quarter of their 2026 fiscal year, which wraps up in January 2026. And for the shareholders, the exciting part is the price. Each share of Guess common stock will be bought for 16 times 75s in cash. Now, like most big deals, there are exceptions. Shares held by certain insiders or those the company already owns won't be part of this payout. What about the people working at Guess, like those with stock options or restricted stock units? Well, the deal addresses that too. Vested options will be cashed out and outstanding restricted stock units, whether they're tied to performance or just time, will also be converted into cash payments based on that 16.75 per share price SEM awards held by specific long-term stockholders will be treated a bit differently, converting directly into shares before the final merger. There's also a mention of their 3.75% convertible senior notes due in 2028. Guess has to make sure the proper notices are given to note holders about how this merger affects their notes, and the new owner will have to respect those agreements. This whole deal isn't a done deal yet. Several conditions need to be met. First, Guess stockholders need to vote and approve the merger, and not just any approval, they need a majority of all outstanding shares to vote in favor, and a majority of votes cast by those who are considered disinterested stockholders. That last part is key to making sure the deal is truly fair, plus they need to clear regulatory hurdles like getting approval under the Hart-Scott-Rodino Antitrust Improvements Act, and any other necessary government approvals. Beyond those initial steps, there are more conditions for the final closing. The pre-closing restructuring needs to be completed, and the representations and warranties made in the agreement must hold true. Basically, Authentic needs to be sure that what they're buying is what they expect it to be. Now, here's where it gets a bit more interesting. Guess can't just go around asking for other offers. They are pretty much restricted from soliciting or encouraging any other potential buyers. However, there's a loophole. If another company makes an unsolicited, genuinely good offer that's significantly better than this Authentic deal, and the Guess board, after consulting with advisors, believes it's in the best interest of shareholders, they can consider it. This is often called a fiduciary out in these kinds of agreements. If the deal falls apart, there are penalties if Guess walks away to accept a better offer, or if they fail to get stockholder approval, they might have to pay Authentic a termination fee of about 20 backs out due to Guess's major problems, or if regulators block the deal permanently, Authentic might not get that fee. They've also agreed not to make any other acquisition proposals for a period after the deal might fall through unless certain conditions are met, again indicating other acquisition proposals for a period after the deal might fall through unless certain conditions are met, again indicating a strong commitment to this specific transaction. Adding another layer, key stockholders including people like Paul Marciano and Carlos Alberini, along with certain trusts and affiliates, have signed a voting and support agreement. These supporting stockholders have agreed to vote their shares in favor of the merger. This is crucial because it essentially guarantees the stockholder approval needed to move forward. They also can't sell their shares during this period with some exceptions. Moving on, in a separate announcement, Guess also mentioned that their second quarter fiscal 2026 earnings will be released on August 27th. This is just a heads up about an upcoming financial report, but it gives us a peek into when we can expect more detailed financial performance updates. This item 8.01 confirms the press release about the merger agreement execution. It's important because it means the news is out there officially, and other relevant documents supporting this deal will be filed with the SEC. And finally, the exhibit section lists the actual merger agreement and the voting agreement. These are the detailed legal documents filed with the SEC that lay out every single term and condition. As an investor or just someone curious about what's happening with Guess, these are the primary sources. It's standard practice to include forward-looking statements, which are basically educated guesses about the future. They warn that actual results could be very different from these expectations due to various risks. Things like the deal not closing on time, not getting approvals, or even unexpected costs are all listed as potential problems. This is a really key part of these filings because it tries to protect the company from lawsuits if things don't go as planned. The company is also telling everyone where they can find more information. They'll be filing a proxy statement for their stockholder meeting and Schedule 13E3, which is used for going private transactions. They're urging all stockholders to read these documents carefully because they contain vital information about the deal. They also direct people to the SEC website and their own investor relations page for these filings. This section details who might be influencing the vote on the deal, typically the company's executives and directors. It's a disclosure requirement to let everyone know who's involved in persuading stockholders. They point to the company's May 2025 proxy statement for details on directors and their stock ownership. And finally, the signature page. This is where the CEO, Carlos Alberini, signs off on the report, confirming that everything in it is accurate to the best of his knowledge. Now, let's put our Warren Buffett hat on and analyze this. The core of this deal is the $16.05 per share cash offer. This represents a significant premium over Guess's recent trading prices, indicating that Authentic sees substantial value in the Guess brand and its future. The pre-closing restructuring where intellectual property is separated is a bit complex, but likely aims to make the brand itself a more liquid asset for Authentic, perhaps allowing them to leverage it more effectively in the future or isolate it from any other operational liabilities. Guess might have the fact that key insiders are supporting the deal as evidenced by the voting agreements suggests a consensus among major stakeholders that this is a favorable outcome. The major strength here is the certainty of cash for shareholders, which is always appealing. It also allows Authentic Brands Group, a company known for acquiring and growing fashion and lifestyle brands, to add Guess to its portfolio. The main risk, as highlighted in the forward-looking statements, is the possibility of the deal falling apart due to regulatory issues or failure to secure the necessary stockholder vote, though the support agreements minimize the latter. Another consideration is what Authentic's ownership will mean for the Guess brand's strategy and identity. Will they invest in new avenues or will it be more about optimizing existing operations? In conclusion, this filing signals a major shift for Guess Inc. It's being acquired by a larger entity that specializes in brand management. For shareholders, it's a cash-out event at a premium. For the brand itself, it's a new chapter under different ownership with the prospect of continued growth, but also the inherent uncertainties of any major corporate transaction. It's a move that reflects the changing landscape of the fashion industry, where consolidation and expert brand stewardship are becoming increasingly important. What's your take on this deal? Do you think Guess made the right move? Let us know in the comments below. If you found this breakdown useful, please give this video a thumbs up and don't forget to subscribe for more corporate deep dives. Also, check out our Discord for more exclusive insights and discussions. Thanks for watching and we'll see you in the next one.